I've been following the Commitment of Traders report for several months now, and I have been waiting for it to fall. I expected it to fall. I have what's called an insiders program for clients that purchase a certain amount of precious metals, and I've been updating them pretty much on a weekly basis. As far as the Commitment of Traders, there's the large commercials. This includes hedgers and the big bullion banks, and then there's the speculative, the specs they're called, and then small traders, and they're taking two sides of the same bet basically. But the commercials are almost always net short. If you deduct the commercials longs from the shorts, you're left over with a balance that's net short, and the specs are almost always net long. And when these positions explode to a maximum, it means we're coming up near a peak usually. And the commercials are almost always on the correct side of the bet. They go the most short right near a peak, and then as gold and silver fall, they start to cover their shorts. Now, we had the greatest short position in history recently, and I'm looking for a chart here, but I don't see it in front of me, so I won't bother with that. But there were many analysts that got very bullish on gold and silver over the past several months, and I made some small purchases for myself. I've got a precious metals dealership, but that's very separate from my own personal investing. And my own personal investing has been in physical gold and silver bullion for quite a while now. I used to have a lot of mining stocks. I sold those back in 2008 or 2010. I can't remember exactly when. But I've been strictly bullion for quite a while because I did a study on the difference between bullion and the stocks. And if you take the Barron's Gold Mining Index, which goes back a long ways, but you take it since gold became free trading in 1971, and gold has outperformed the mining stocks that are in the Barron's Gold Mining Index by 400% since then. So the mining stocks tend to give you leverage on the way up, but they have a little bit more leverage on the way down, and over time that increases the losses. So I just went with bullion. But anyway, I was expecting it. I know that somebody dumped quite a few tons of gold onto the market when the price collapsed that day. And but just after the market had closed, I made a significant. I do a monthly accumulation myself. I accumulate some gold and silver every single month. That's called dollar cost averaging, and it's one of the best ways to, when the price drops, you get more for your currency. And I like it when the price drops. A lot of people hate this. They point at it and they say, oh, this is a manipulation and stuff. Well, yes, gold and silver are manipulated, and that's the only reason that you get the opportunity to buy gold and silver cheap, much, much cheaper than what market prices would normally dictate. If gold and silver were in the correct equilibrium, where supply and demand is being set into equilibrium by price, it's called the price discovery mechanism. If that wasn't being manipulated, there would be no opportunity. Gold would already be a few $1,000s an ounce and greater, and that would make it profitable for the mining companies. Right now, the mining companies are all having a very tough time, and that's a good sign. That means that there's going to be shortages in the future, and that means that it's going to go higher. Without the manipulation, it would never have you wouldn't have the opportunity of gold and silver one day exploding to the upside, and they are going to do that one day, and I have pretty much bet everything on it. So I really like these pullbacks. I hope it goes lower, and guess what? The Commitment of Traders reports they didn't cover that much of their short position last week. So that means that there is a lot more room for it to go lower than it is right now. So when I made my purchase on the day that gold and silver took the first big drop, I only spent. I had a certain amount of cash in reserve, and I only spent about half of it. And I'm withholding some more for another buying opportunity. I still will be doing my monthly accumulation on top of that, but every once in a while, I make a much larger than normal purchase. So I was actually expecting this. I did a video on it, I believe, last week, where I played some of my insiders reports from August 16th, I think, was when I drew some charts and I said, if it falls to this area right here, I'm going to make a purchase. And that it hit that target, and I made my purchase. This is the typical public mindset, and it's completely opposite of the way they run the rest of their lives. And it's being ruled by your own fear and greed, and it's something that you have to battle. But I started studying with the crash of the NASDAQ in 2000. I really started studying the markets and the global economy and monetary history. And by 2002, I made up my mind that precious metals was the place to be. I started purchasing gold. I've got a tube of gold eagles that only cost me $325 each.
Wow.
October of 2002. By April of 2003, I had discovered silver. I started buying a whole bunch of mining stocks, and I caught the very last up leg. Where the mining stocks actually outperformed. If you create a chart that is the HUI index or the XAU index, the Philadelphia Gold Mining Index or Gold Bugs Index, and the unhedged gold and silver mining index, you divide those charts by the price of gold, you can find out how many ounces of gold it's worth. And if the chart is going up, that means the mining stocks are outperforming the physical metals. If they're falling, the physical metals are outperforming the mining stocks. And it was falling from 2006 until just last December, and then turned around, and the mining stocks have been outperforming the metals since last December. It was a very good buying opportunity. I'm not really sure if gold and silver continued down for, I've been expecting a deflationary recession, and so it is possible that we could see lower prices. And the fact that the commitment of traders, the commercials have not completely covered their shorts. They only covered about 15 or 20% of their short position. That says to me that things should go a little bit lower than this. But to me, I just consider it a buying opportunity. It's on sale. This is something to look forward to, not to fear. And another thing is, in my insiders report, I said this is similar. The precious metals market and the economy. This is similar to a bow and arrow or a slingshot. And the further you pull back on that bow before releasing the arrow, the higher and further that arrow is going to fly, and the faster it's going to go. And if you want gold to hit, if you're an investor in precious metals and you want gold and silver to hit spectacular highs, then you want this. We're in a cyclical bear market inside of a giant secular bull market. The bull market will resume one day, but this bear market, you want this grinding bear market to beat people to death and to make them feel like it's an impossible situation, and you want the maximum number of people to give up on this sector, and then it is ready for a spectacular charge. If this market had just kept on marching ahead like it had from the year 2001 to 2011, too many get-rich-quick people, and the dumb money jumps on board. And it wouldn't go nearly as high. The bull market probably would be over by now if it had just kept on marching along for the next 5 years, and we were up at $2,200. But I'm expecting prices well north of $5,000 an ounce. It's all because gold and silver are the only investment out there that has a central bank guarantee. The central banks will they have absolutely guaranteed all of us, purely by the design of a debt-based fiat currency monetary system, that they will always print more and more and more currency. They will never stop. The currency supplies always have to expand infinitely into the future. Gold and silver are finite, and they are the other thing that is considered money. They are the other safe haven investment. Most investors are taught to go toward high-quality debt like U.S. Treasury bonds, but there will come a day when sovereign debt becomes very suspect, and at that point in time, everybody is going to be rushing toward gold and silver, and that is when when everything goes nuclear, when you see gold and silver become unaffordium and unobtainium. One of the things that I love to do is to sort of haunt the Federal Reserve's website. The St. Louis Fed has something called the St. Louis FRED, F-R-E-D, which is their research and educational site. And you can generate thousands and thousands of, you can generate charts from thousands of different data sets. And they collect information on everything. And you get, they also import the information from the Bureau of Labor Statistics and the Census Bureau and every other department of the government that generates statistics. And so it's all there in one place. And you can take these charts and you can put them in different formats where it's year-over-year percent change or whatever. You can pick different time periods. And one of the things that I've been showing in several of the last few months, I've been showing a lot of videos showing that, first of all, this is the weakest recession on record. It took zero interest rates and the creation of $3.2 trillion worth of base currency, and they bought the weakest recovery on record. And when you look at how things are starting to go negative on many of these indicators, you mentioned many of them, but you can also include things like the year-over-year change in government income, the number of rail miles. This is a very good measurement of the health of the economy. How much stuff is being shipped all over the country? So the number of rail miles is a very important indicator, and it's been falling. And a whole bunch of these data sets are showing that we entered a recession either last quarter or when they declare a recession, it's a trailing indicator. You have to have 2 consecutive quarters of bad economic news for them to declare that we're in a recession, which means the recession started more than 6 months ago. And so if you go to the Fed's website, you can get a glimpse into the future. And I believe that we're already in a recession. If we aren't, it's probably going to start in the next quarter, but I think we've already started a recession. And I think that things are going to start getting worse and that we're going to see a crash. And I don't think the Fed is going to be raising interest rates. I think they're going to be dropping interest rates again to zero, and if they have to go negative, they will, and there will be more QE. That's what will happen when the next recession hits. And here's something that most people don't know, is that since the beginning of the United States, there has been a recession roughly every 4.5 years. We are now, this recession is from 2009. And so we're 7 years into this economic expansion. It's the 3rd longest economic expansion in history. And it's pretty soon it will become the 2nd longest economic expansion in history, which means that the odds of going into a recession this year or at least by next year, the odds of going into a recession before the end of 2017 are probably greater than 90% at this point. I haven't calculated them, but based on history, it's almost impossible that we will still be seeing economic growth in 2018.